Oh, here we go. Hello, everybody. Real Estate Ninja here. I hope you're doing well. I have 3 specific warnings from different banks, JP Morgan, Morgan Stanley, and Bank of America. We are going to explain through these 3 warnings that they've just put out in the last couple of days why this is the greatest opportunity of your life as this economic collapse is well underway and gets really deep into this winter. I want you to understand. First off, I want to thank everyone that's subscribed. This channel is absolutely blowing up. There are so many people coming on board, understanding where this real estate market is going and this economic system is going, and they're not afraid. They're getting ready for it, and they're chomping at the bit to take advantage of that. Let's dive right into the first story. This one is out of Bank of America, and it's entitled Bank of America's Hartnett says markets outlook flips from greed to caution. Or sorry, I apologize. Flips to greed from caution. Now, a few months ago, I explained where we were going to go through this sort of haze, this little bubble of euphoria, where everything, the bad news was starting in October, which it did. We saw a war broke out first week of October. We saw layoffs, a whole new slew of layoffs that make the way that they're giving this information, like the GDP exploding, but it wasn't exploding because our country is producing a lot. It's blowing a ton of money. In October, we found out that the government had printed over $1 trillion in the last quarter. And now the money that they're printing, a lot of it is just going to pay back the last debt that it paid, right? We are seeing unemployment numbers explode to the higher, but what they told you was a lie. They hid the truth. For every 1 job being lost, full-time job, 2 or 3 jobs, part-time jobs. Very few hours comes about, and they're counting those, okay? So we've seen all this, but because of this data, like the GDP data, exploding higher, because we're building factories because China is about to move into Taiwan. And look, while we're doing this interview, the Chinese president is here meeting with our president. The whole world is splitting, fracturing. There's a lot of stuff going on behind the scenes. And also the government is printing tons of money to send it to all these other countries, okay? We are moving into hyperinflation here in food and energy, all right? So there's this euphoria that's been going on. Oil is dropped, right? Seasonality, remember seasonality. None of the factors that have caused this economic crash that has been well underway for a long time have changed. As a matter of fact, they've gotten worse. But the public does not see that. So this is what this story is about. Bank of America's Hartnett says markets outlook flips to greed from caution. This is when you need to have caution. It says here, the caution that pervaded stock markets in the past 3 months has now switched to year-end greed on expectations of a decline in U.S. bond yields, according to Bank of America Corp's Michael Hartnett. Again, remember, nobody showed up for the 30-year bond market opening, the offering 2 days ago. And they're trying to hide this and saying it was about the Chinese ICBC bank hack or bank, the ransomware attack. All right. They're trying to hide this information from you. The markets are delusional. This is why markets build up and pop and break down. Okay. It says here, the fear among investors last month about a surge in treasury supply, as well as the worries about fiscal deficit, has caused yields to overshoot, Hartnett wrote in a note, that has now flipped as the 10-year yield is seen closer to 4.5 rather than 5.5, the strategist said. The optimism has been reflected in fund flows, with global stocks recording inflows of 8.8 billion in a week through November, according to the note, citing EPFR global data. Still, cash remains the asset class of choice, Hartnett says. Now, when he talks about cash, I want you to understand, other countries are getting rid of their dollar holdings. They are reducing them. China, Russia, Japan, definitely Iraq. You're seeing all these other countries that are selling their currency little by little so it doesn't cause a panic. But in America, cash is the choice, right? I talked about this last year when I sold 1/3 of my stock portfolio in the commodity sector. That did very well for me, because I said I'm going to start building up some cash positions going into this next year, because I'm going to get ready for some deflationary drops, right? Even though we're going to have a slight bout of hyperinflation in food and energy. All right. I know that oil is at $87. That doesn't matter to me. I'm looking at the bigger picture. Hartnett says he remained broadly bearish on the U.S. stocks this year, a view that played out over the summer as the S&P 500 dropped 10% from a June peak. He struck a rare bullish tone last week when he said technicals no longer stood in the way of a year-end rally. Let me explain this. We are going to see all kinds of information about in the next 4 weeks, especially going through and past, Black Friday, that this is the year. This is when everything turns around. Things are looking great. The consumer's strong. I'm telling you right now, the consumer is not strong. We're seeing the consumer fall off a cliff. There are going to be, I believe that you're going to see in January. As a matter of fact, type 1 if you agree. In January, you're going to see the truth come out that this Black Friday was not a Black Friday at all. All right. But you're going to see all this hopium coming in for investors over the next 4-6 weeks saying that. And so they're going to buy things and leverage stocks, and they're going to see a rise, right? But that's a false sense of security. Let's move on to the next story, because I think it's very important here. That is right here. The next one is out of Morgan Stanley, and then we're going to get to JP Morgan's. Morgan Stanley, the title is out of Yahoo Finance. Morgan Stanley faces Fed probe over foreign client vetting. Says here, and we're seeing a lot of probes going on. We're seeing the one with, was it Freddie Mac or Fannie Mae? Sorry, one of those. Totally blanking out right now. I did a video a few days ago. That is amazing what's going on with that bank. We are seeing the mortgage-backed securities crisis 2.0 start right now, where the government has gotten so bad where they have allowed so many mortgages in that should not have been given. And the reason why is because people are already defaulting on them, but they're keeping out of the news. You're going to find out all about this. Go back and check out that video. It is going to come to light first quarter of 2024. It'll be in fever pitch second quarter of 2024. But here's another probe that's going on. The Federal Reserve is now investigating how Morgan Stanley's wealth division has been vetting foreign clients, according to a report from the Wall Street Journal. According to the report, the Fed wants to ensure the proper controls are in place to make sure that there isn't money laundering occurring. There's more than that. They always bring you to money laundering, okay? That's the boogeyman. You know, hey, you can't have Bitcoin because all the bad people, the pedophilia and all that, all the pedophiles and all the money laundering, the drugs and all that kind of stuff. You're like, yeah, right. It's just because you haven't figured out a way of tracking everybody. That's what they do with the dollar, right? That's why you have to pay all these fees at your bank, and you have to get treated like a criminal when you go to the bank and withdraw money out of of a certain size. You are the one that's treated like a criminal. The criminals don't get treated like that, just so you know. Says Morgan Stanley's wealth management arm is being probed by the Fed on whether they do enough to prevent rich international customers from laundering money. Now, that's according to a report by the Wall Street Journal. The report says that the Fed has been scrutinizing the bank on how it vets its clients. Now, Yahoo Finance reached out to Morgan Stanley for comment. They declined to comment for now. That's because they're in the middle of something. But within the report from the Journal, they're saying that Andy Schapperstein, who oversees this division, he has met with Fed officials and promised to recertify any shortcomings. Another crackdown here from federal regulators when it comes to the bank processing exactly what this could do for the business. I believe what you're seeing is this. Money is flowing in and out of this country because there is a collapse happening, and it's about to be in the forefront of the American people's eyes, because it's going to be all over the news in 2024 sometime. So what's happening is money is flowing in and out of the country, and big sums of it. And that's where the Feds sort of pick up on this, and they start these probes. Where's this money? Remember, other countries that want to get rid of dollars, if no other countries want to take the dollars and they got to get them into this country, they've got to get them in a way to where it doesn't incite panic, and they're buying things little by little to be able to, that's what happens when you're the buyer of last resort. The U.S. will be the buyer of these dollars. Now, the last story I wanted to go over with you is this one. It is out of JP Morgan. Says JP Morgan just added the holy grail to its $1 billion per day crypto. You know what? I got to make a whole nother video about this. This is going to take a lot of explaining. Let me do this. I'm going to do this one. This story, I was going to make its own video, but this is about the ransomware. I started the whole video about this, the ransomware at ICBC. There was a ransomware attack a few days ago. Massive. It's actually the largest bank on earth when you're talking about its asset size. And it says here, this is out of Market Watch, and I said they were going to blame Russia. Straight up, 8 hours later, mainstream media is blaming Russia for this attack. All right? Because you got to have the boogeyman. But I said there was something really weird when when ICBC wanted to make sure everyone knew that their treasury deals went through. And I said, watch that. Type 2 if you remember me saying this, because I nailed it on this one. And this is exciting. I said, watch that. There's going to be something really interesting that comes out, because why would the bank say, okay, we got a ransomware attack. It's the U.S. arm. This is a China bank, but it's only the U.S. arm that got attacked, right? And they wanted to make sure everyone knew, oh, our treasury deals went through. Our treasury deals went through. And I said, that's weird. All right, this is why. Check this out. We had nobody show up for the 30-year bond auction. This is bad. It was the longest tail in the history of 30-year bond auctions ever. The tail means, just a quick explanation, the government comes out and says, hey, we're desperate for money. We want to take your money and pay you back just a small bit of interest. That's just a breakdown compared to inflation, right? They go, okay, we're offering, and I'm just throwing out numbers, 4.5% for 30 years. Anybody? Crap. All right, 4.6. A couple people? Crap, we need more debt than that. We're more desperate than you think. Then the 4.7, 4.8. And what they did is, by the end of the day, when they got all of their debt that they wanted to raise that day, the tail on where it originally was offered at to where they finally ended up closing the deal was the longest in history, okay? It's a big, bad thing. All right, can you imagine? So that's on 30-year. Nobody wants to lock up their money for 30 years because they're so afraid that America is collapsing. The economy is collapsing. Nobody wants to put their money in that long. So can you imagine when it hits the 10-year bond offering? Holy cow. I've been telling you, mortgage rates are going to hit. And if you want, there's a handful of 80% off links. And I'm telling you what, by the first, you're never going to see this again with those courses. Real Estate Crash Course, how you can prepare right now. And there's also a special offer to everybody coming next week or the week after, like the Black Friday deal, that is in that course. All right. So I'll put those down below if you want that course. But there are things you could do to get ready for this. So check out this story out of Market Watch. How ransomware attack on ICBC rattled the treasury market and shook up the 30-year bond auction. Oh my gosh, they got it figured out. It wasn't our fault that we didn't sell any 30-year bonds. It wasn't because people didn't want it. It's because Russia attacked a Chinese bank and that caused nobody to buy them. This is the story out of Market Watch. Oh, this is so exciting. It says it was a trading day unlike any other for traders in the $25 trillion treasury market, with a 30-year bond auction seen as having been particularly undermined by a cyber attack on the U.S. unit of a Chinese bank. In recapping, Treasury's poorly received $24 billion bond auction on Thursday, traders said the weaker than expected results likely had at least something to do with this week's ransomware hit of the American arm of Industrial and Commercial Bank of China, known as ICBC. That attack reportedly caused disruptions across the market and had some impact on liquidity. Yeah. So I'm telling you, when that hack was going out, China made sure. They told everyone, hey, just so you know, all of our trades have been cleared. Everything's good on the bond market. That was their way of saying, don't believe the lies that are going to come out. And I'm telling you right now, I can't even say that. This channel has been blowing up, and I got to be really careful because the other channel got hit because I said some things. But I'm telling you, okay, read between the lines here. All right, China's saying everything's okay. We closed those deals because they know, yeah, someone hit us to lie about what's going on. This is so amazing. So then I said, watch that. Someone's going to come out, and they go, Russia did it. And now they're like, oh, and this is what happened. This is why nobody bought our bonds. It's a big deal. It is a big deal. I'll just say it. Heck with it. I believe just like that pipeline that just now we figured out, dang, yeah, I can't say a lot. Jesus, this sucks. How do you, that pipeline that was attacked, you know, over on the other side of the world, and everyone's trying to figure out who did it. Look who did it now. It's all over the news, right? Same thing with this. We need to come up with a false narrative of why nobody's buying our bonds. It's bad. Okay, get ready for craziness in the real estate market, in the stock markets. In 2024, you are going to see so many fireworks. The only question is, are you going to be ready for this? Here it is right here, the lies. I'm telling you what I believe to be a lie. Type 3 if you agree this is a lie. This is like a made up story. Oh, it's because of them. And there's ransomware attacks that people do on themselves to make it look like it's someone else. I'm just saying. Traders were grappling on Friday to answer the question of what created such a lack of interest in the auction, which went so badly, and it also shook up U.S. stock investors. Thursday's sale was the worst since November of 2021. What was happening in November of 2021? Like, the world was pretty much coming to an end, right? At least that's what CNN wanted you to believe. So even if you're not invested in bonds, you have to understand, you want to be investing in real estate, you always have to watch the bond market. Okay, I'm telling you, there is a false sense of security with these bond rates, these 10-year bond rate at 4.5. I do not believe that they're going to stay at 4.5 for long. Either the Fed's going to raise it up through the Federal Reserve Fed funds rate going higher and then ultimately bring the 10-year bond up, or there's going to be more shit scaring the market and less people showing up, okay? So I'm telling you, this is our pipeline story right now in the economy. This is akin to the U.S. getting its financial pipeline hit. That's what bonds are, all right? All right. It's possible, it says, that bonds simply look much less attractive. Do you think? This is following a recent explosive rally since late October, according to Charlie McElliott, a cross-street asset macro strategist at Nomura Securities in New York. Well, let me tell you, Charlie, your college failed you. And this is why. Of course. Duh. Bruh. Like, think about it. Who would want to let me do this. Let's just ask you. Type I would or no way, Jose. If you would like to tie up your money and hold that bond to maturity for the next, now I want you to think about this too. Think about this. If you would want to tie up your money for 30 years and get a payment of 4.5% or whatever the 30-year bond is at, I'm just rattling numbers right now, for 30 years, would you want to hold it to maturity? Put I do or no way, Jose. And the reason why I ask this, now think about this. You also have another way of making money from bonds, because if you were to lock in a 30-year bond rate at, let's say, 4.5% and rates plummet, right? Your bond actually goes up in value, because someone else that wants to buy bonds in a 30-year bond market rate that's, let's say, 2%, they would go, oh my gosh, I want to buy this guy's 4.51 and get 4.5% instead of 2%, right? So there are countries that are going, we're not even betting that rates are going down. This is not a joke. And this is what gets me excited, because that means we got a pretty good handle on where rates are going over the next couple of years. And I've got so many stories to come out throughout today. Please watch. I mean, keep an eye. The channel's blowing up. I'm so grateful. Thank you so much to everyone that's hitting the subscribe button and the bell icon. Because people are getting it. They're like, oh my gosh, this is really happening. This opportunity of real estate that's coming, you want to be buying when real estate is, people will make fun of you. People will go, you are insane to buy real estate because it's falling off a cliff, right? Price-wise. But not only that, rates are sky high. I teach this in the real estate crash course. I put enough in there where I'm like, I guarantee you, not only 14-day money back guarantee, I guarantee you that you will pay, what is it today? $199. You will save 10 times that much. You will save $2,000. Do you know how the easiest guarantee is? You watch that channel, all those courses, those videos, you'll save $2,000 in your next house purchase, or you will make 100 times that money, at least, $20,000, if you put those to action in the next year when you buy your next real estate property. I can make that guarantee. I've been doing this for I started in 2001. That's hard math. 23 years, 22 years. My point being is that there are massive opportunities, but the massive opportunities come because no one else has the nuts to do it or can do it because their credit score is screwed up. And that's where you're seeing right now. I am chomping at the bit. I want to see 1 million of you make $1 million. I want 1 million of the coolest friends ever that had the cojones to actually go out there and do something. So am I trying to sell you something? Heck yeah, I am. I'm trying to sell you the greatest opportunity you can find in your lifetime. But you know what? You got to put some skin. You got to have some skin in the game. How many of you wish you would have been ready for 2008? Well, some of us were. And I'm going to be honest with you. From what I went through then, selling up 90% of my homes in 2006 to get ready for 2008, and what I made, as opposed to, during the crash, what's coming now? That was a joke. That was mini me. That was the mini me of recessions, the mini me of opportunities. How many of you are ready? Thank you to everybody that's hit the subscribe button. Now I'm going to go back over to the Economic Ninja channel because I'm telling YouTube through my actions, I don't care what they do. And I'm going to keep trying because that channel, it's been pushed down. This one, it's exploding. Thank you. Thank you so much for making this happen. The Real Estate Ninja is out.